Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Wednesday. What's up, everybody? It's Wednesday morning, hump day, as they like to call it. Hope you guys are all having an amazing day. Welcome to the Daily Market Commentary. I'm your host, Chuck Fulkerson, where we had an interesting day yesterday. A couple of breakout trades, one that worked out really well and one, not so much. So we'll review all of that on our session today. For those of you that are new to the channel, what we do is we look at the same 10 to 12 futures markets every day, identifying potential breakout trades and reversal trades from an educational perspective. Leave a comment down below if you're not new to the channel. I'm looking at our next educational webinar. Got a lot of great ideas in yesterday's video. Leave a comment down below in some educational topics you might be interested in. Love to hear that from everybody out there. Got a couple of really good ones yesterday, and so I'll have an announcement by the end of the week about what our next YouTube live webinar is going to be. So, okay, let's go ahead and dive right in. So starting today in the S&P, yesterday we put in a brand new all-time high. We have come back up over our daily high from February of last year, from October of last year. Very strong rally to get us back to that level. Put a new high in the SPX, but in the ES we're just about there. And now we had a breakout trade identified yesterday. So leave me a comment down below if you're able to catch that breakout trade, as that one worked out very, very nicely. Very strong move up. And then we saw our momentum start to slow off later in the afternoon. And in the Globex session, we've actually come back up to right near where our high was overall. So what does this mean? Well, a couple of things. First of all, this is now a speed candle, right? This would represent, especially on a 4-hour chart, you'll see that this represents a speed candle. Speed candles tend to get retraced. So what this does for us is gives us another opportunity to see where we might be able to get long on a pullback. I'm always going to be out there looking for good pullback opportunities, and in my mind, this now becomes a very strong pullback opportunity potential if price comes into here. So where should I short it? Here's the answer: I shouldn't. There's no reason to short an all-time high. I hear people a lot of times say, oh, well, look, we're back to the all-time high. We're at the extreme of supply. More times than not, I've seen that price at the extreme of supply breaks through. Now, it takes a couple of days, goes higher for a few days, and then comes back down. Like, let's look at our last time that we had this all-time high in January of last year. It took until August to get back up over that high. We popped up for a few days, and then we pulled right back down to a quality area of demand before then rallying higher. So what this tells me is that there's a chance that we'll probably pop higher for the next few days and then pull back to a quality area of demand, which may be the one that we just highlighted. And it could be a bit wider than that. But overall, I'm not looking to go short, especially as a swing trader, right, using 4-hour and hourly charts. If you're so inclined and you really, really want to do it, you can go down to maybe a 15-minute chart and look for momentum shifting. We are seeing some selling candles coming up into here, but I'm not really looking to do that. I really would prefer just to stick with the overall big picture trend and the trend direction that we have. In the NQ, same exact picture. NQ, we had the breakout throughout the day. We had our little 15-minute level that was identified during yesterday's daily market commentary that unfortunately didn't quite make it all the way back into it, but that's okay because we still had the breakout in the S&P. Speaking of breakouts, we got a nice little, I thought we had a little opportunity here with crude oil to break out above here, and we got a little move away from it, but remember our 6-candle rule. This is where the 6-candle rule gets important. 1, 2, 3, 4, 5, 6. After 6 candles, the idea is to take the stop and move it to break even. Price then pulled back overnight fairly hard to this 2 a.m. Reversal period, and we tend to see a 2 a.m. reversal period happen pretty regularly, and now we're starting to move a bit higher. So if I look at this on a 15-minute, I see that we had a really strong move up, and now we're getting a little bit of sideways price action where might my next area, my next level be for a potential reversal? Well, looking at yesterday's strong rally off of one of these levels that happened throughout the day, we've got some demand down in here. That's what price is currently reacting off of. We are getting a fair amount of upper wick action here to show me that there's some weakness. So I think that the best action you can do right now in crude oil is hold for just a moment. Mainly because of that momentum, which is weakening, right? If I throw my momentum indicator up here, you'll see that as price is continuing to go up here a little bit, my momentum is definitely going down, right? Now, that waning of momentum, not always a bad thing in itself. Doesn't mean that prices are going to come cratering. Sometimes it's just that we need to take a little breather, right? Take a little breather. Let price come back down into this region where I can see some definite reversal opportunities. I'm not willing to short it at this point because I don't have anything confirmed on the downward side on the downward trend. If you are so inclined and you do want to short it, you feel like it's losing some steam. You've got a demand area here that price has to be able to get through for price before I would be shown that price is are gonna fall from this level. All right, next, gold. So let's take a look at gold. So in gold, we had our breakdown. We talked about this level yesterday. So price broke down through. Your stop would be above this pivot, so it didn't come back up, and then came all the way down to your profit target. So hopefully you're able to catch your gold move all the way down to the profit target on the little breakout. And now we've rallied up from there and starting to head back down a little further. So if I look at the 4-hour chart, I'm definitely more of a seller than I am a buyer, and you're getting a good reversal right now. I wouldn't be opposed to somebody being short gold off of one of these levels, especially in a candle-to-candle style. So that's really off the reversal off of one of these levels up in here where price is continuing to move. If you feel like, oh, I've missed it, then you probably have. So we're bouncing off of some of these levels up in here. You may get another shot down here. Be aware that we may just see some more basing, so look for the basing around this area as a potential breakout as it gets into that region. I don't have anything for you at the moment for me to definitively lean on, though, as far as a potential area. I'm just not looking to be a buyer. Right? The big picture is telling me I'm better off being a seller of this gold market. Next, let's take a look at our bonds and currency markets. So in our bonds, we had a breakout to the upside here in the ZN trade. So our ZN level, we did break out above. So that level has met entry and is continuing to run. If you got in on this ZN trade, I think now is the time to take your stop and move it up to break even. I would anticipate price to make it up to 123.18, somewhere in this area, or this 180 region. I think there's still room for price to go. But take your stop, move it up to break even, lock in a little bit of profit on that side. Next, the Aussie. So in the Aussie, we had a confirmation entry through here. We got our breakdown below, and price is continuing to move very hard. So what this does now is this sets up for us a short opportunity on a rally at the retracement of this speed candle. Okay, that's the level that I would look for. We may not get a retracement of that speed candle anytime soon, but that's the level that I would indeed want to look for and identify. Now, this happened in the overnight hours, so not as much volume through here. But if price does indeed make it back up, I think you can safely anticipate a reversal. Another area is this area right here. So there's a couple of nice reversal levels, but I think that overall, we are definitely on a selling note in the Aussie, looking for some sort of a reversal. I don't know that we'll get it on the hourly chart, and that's where our breakdowns can become very useful. In the euro, we just missed our entry as it came pretty close. Didn't get us in. We're getting a little bit more bullish price action here down here at the moment. If this was flipped upside down, I'd call it a Batman trade, as it looks a little bit like Batman's cowl as it's kind of starting. With those longer wicks there and 2 points and price then. So that's usually, a reversal picture that I like to see with those upper wicks. Still have those areas up here for potential shorts. When I look down below me for potential longs, I don't really have a whole lot, right? I move out to the daily chart, and if you go all the way out to the daily chart, I mean, you're looking way down here for your next decent long, and that's not for a while, right? As we've just kind of hovered sideways. So shorts are still the better option. Canadian dollar. So we broke down below our Canadian dollar breakout level. So leave me a comment section down below if you took that Canadian dollar level, as we have hit our breakdown area in the Canadian below that level. Prices are moving pretty nicely. So if you caught that Canadian dollar level, I think the next step is to take your stop and move it down to just above this area here, right? So lock in a little bit of profit by taking that stop, moving it down, protecting yourself a little bit on that Canadian dollar breakout. So that one worked out pretty nicely overall. Next, the pound and the yen. As we have been just hovering between our areas in both the pound and the yen. Nothing exciting to really talk about here on the pound and the yen, as we've got our reversal level up here, our breakout level down here inside the Great British Pound. Once again, the strong overnight level leads to a speed candle, which oftentimes get retraced. And then the Japanese yen, well, it did a whole lot of the same thing it's done for the past 2 weeks, a whole lot of nothing. So really not a whole lot to add on that piece. But the lesson I want you to take out of today, if you look at the crude oil breakout that failed, the crude oil breakout failed, but it had a 6-candle basing afterwards. And so I follow the 6-candle rule very, very closely. The S&P worked out very well in the breakout. The bonds are still continuing to run on the breakout. And then the Aussie gave us the speed candle. So a number of different opportunities set up in each of these trades. So what I would say to you is, what are your rules around breakouts? If you've got your breakout rules understood, if you've got your stop loss rules, how long do you sit in a trade before it goes against you? I am not a huge fan of anything longer than 6 candles, and I found that to be a very useful rule that has allowed me to protect myself overall. So if you got any questions, please send me an email, support@tradersarmy.com. Remember, tomorrow there's no daily market commentary. We have our live trading room tomorrow at tradersarmy.com. If you feel like you want to learn a little bit more, go to tradersarmy.com, use the promo code TRADEUP, and you can try us out for the first month. See if you like it. See if it makes sense to stay as a subscriber. So hope you guys all have a great day, and I will see you soon. Later.